Good morning and welcome to episode 19 of the FinTech Insider Breakfast Show, a show from the folks from 11FS bringing you the breaking news from around the fintech and banking landscape every weekday at 8:30 BST. I mean, it's not going to be every weekday because I'm not going to come in on Good Friday. I think my wife and kids will definitely kill me if I do that. So there won't be a show tomorrow, but we will be back on Tuesday and I'll let you know who that guest is going to be at the end of the show. As we're all going to be cooped up for the next couple of months, we thought we'd try and start every morning a little bit brighter. And today I am absolutely thrilled to be joined by Freddy Kelly, who is the founder and CEO of Credit Kudos. We're going to be talking about the need for affordable credit, especially in these times, and how they're planning their part and actually everything that's happening with COVID credit for freelancers and small businesses is it's taken off in a major way in terms of people getting involved in it, but also the media really getting behind it as well. As always, we love your questions and comments. So as we get into this, let us know where you're joining in from, but also let us know if you've got any questions for Freddie as we get through. So Freddie, that was a very long introduction from my perspective, but how are you going, my friend?
I'm very well, thank you. I'm very well. Thanks for having me.
No problems at all. Where are you for everybody who's sort of tuning into this? Where in the world are you today?
I'm in North London. I'm in Tottenham.
How is coronavirus affecting North London right now?
I imagine in the same, well, hopefully in the same way as everywhere else. It's very quiet. It's lovely to go for a run around here. But other than that, I'm pretty much cooped up as most of you are.
Do you know what we're finding? Like there's a real difference between people who are kind of out in the sticks and people who are kind of still in cities. There seems to be out in the sticks. It seems to have taken 2 or 3 weeks longer to kind of hit everybody than it did sort of London, which I mean, particularly for the UK, seemed to be like the real epicenter of it. But I mean, how's things affecting Credit Kudos? Because I mean, you guys have been sort of born in a digital age, right? So your working practices are probably very digital still.
Yeah, I mean, we're fortunate that we were able to transition to remote working really quickly. We'd taken a leaf out of the Monzo book and instigated a kind of weekly work from home day prior to this all kicking off. So we were kind of fairly versed on working remotely, and obviously we've had to make a few changes now that it's sort of a constant. But so far, we're very fortunate. Everyone's been able to just carry on as normal. Touch wood.
Well, that's good. I mean, how have you found the difference between sort of once a week? I mean, I used to work most Fridays at home, but depending on sort of where I needed to be. But the difference between working once a week at home and working 5 days a week at home is it's a bit of a marathon at that point, isn't it? I feel like I'm getting like sore spots from just sort of sitting in the same spot constantly. But how have you found sort of dialing up the dial to 5 days a week?
Yeah, it is weird. You find yourself sort of pacing around a little bit, and I certainly go back to your previous point. I'm noticing a lot of people sort of bragging about the fact they've got gardens over Zoom and whatever conference tool you're using, which is somewhat frustrating as I'm not in that fortunate group. But yeah, it's been pretty good. We've instigated a few sort of new initiatives. So we've got kind of like a lunch hour Google Hangout that everyone can come and go into, and we've got a few of my colleagues are running a weekly pub quiz on our Friday sort of all hands, where if you want to stay on into the evening, we can all have a chat, because I think it's quite important that everyone gets to see each other and chat more frequently, and just have an opportunity to talk where we're not talking about work necessarily as well.
Do you know, it's interesting, isn't it? It's those little things, isn't it? It doesn't feel like productivity from a the things you're doing, the work you're doing is the bit that slips. It's actually the connectivity between humans, isn't it? Which ultimately is the culture of the company, isn't it? So I mean, I think in sort of interactions that we've had with you guys, culture's always sort of come through very strongly. So it's good to have that foundation coming into this period, isn't it? Because essentially, if you've got that, then it makes all of this a little bit easier, isn't it? I do worry for companies. I know some of the bigger companies where culture hasn't really been always the sort of focus. So going into a period where everybody's already quite disconnected, being even like physically disconnected, could really put a lot of strain, I think, on the setup within those organizations. I mean, how has it affected the business? How's the sort of pandemic affected Credit Kudos from a day-to-day operational perspective? Have you seen changes in how your customers are behaving?
Yeah, certainly in terms. So the other thing I was going to say internally is actually onboarding is the really interesting one, because we're in the unique and quite rare position at the moment where we're still adding people to the team, and so we've now got a few people that I've never met that are working for us, which is it's kind of bizarre. So we've had to kind of really strengthen that culture you talk about, and find a way to kind of allow it to proliferate through digital means, which is seems to be working, but it's a challenge.
Do you know, it's funny you say that. How are you doing your digital onboarding? Because we try and do for any new joiners, the Monday that they join, I personally try and do like a chat and a Q&A, sort of give them the sort of origin story and sort of tell them why the company exists in the first place, and sort of go through with things. And usually there's 4 or 5 people a week, new joiners. I think this week there was one poor guy who joined on his own, so it was me and him for an hour. Which was, I think, really intense for him for like an hour. It was like an hour-long chat with the CEO for like the pressure of having to come up with really smart questions. But he handled it really well. So, but how have you been handling that sort of remote onboarding side of things? Because getting people up to speed with how your company works and your values and everything, that the ways in which your rituals kind of work is critical, isn't it, for getting them up to speed?
Yeah, we've got some really fantastic people that have stepped up and sort of built out onboarding processes and have done it with sort of being remote in mind. And we've done, as you say, having sort of calls with key stakeholders across the business for them to kind of introduce themselves and talk about their work and what they do, and things like the pub quiz I mentioned, and we're fortunate that we're sort of at the beginning of a quarter, so kickoffs and things like that have been going on. Yeah. So yeah, we're still managing to keep them kind of hopefully tuned to the business, and obviously that will improve once we can meet them and be face to face.
Do you want to tell us a little bit more about what Credit Kudos does then, for anybody who who's watching this who don't know the company? Give us the overview.
Yeah, so Credit Kudos is a credit reference agency. So that means we provide credit scores to businesses that want to lend money, and that can be in a number of guises. So that can be loans, it can be credit cards, mortgages, car finance, that kind of stuff. Unlike the incumbents in that space, we're taking a new approach to the way that we measure the risk of consumers, and that's through using open banking data. So rather than looking at kind of quite sort of static measures of creditworthiness, like past borrowing behavior and sort of location and demographic, that kind of stuff, we're looking at the day-to-day behavior in an individual's bank account, typically over 2 years, and then using loan performance data, so data we have about existing customers that have been through our process, to understand whether those customers are risky, and build a sort of projection from that.
I mean, given the circumstances that we're in, it's going to affect the lending ability. Banks are in a weird place, aren't they? They both have exponentially increased risk given the current climate, but also dramatic amount of pressure on them to kind of lend more, both from a SME perspective, but also from an individual perspective. So, I mean, how really is the pandemic affecting credits and lending generally right now, do you see?
Yeah, it's kind of double-edged. So obviously, so what the FCA, the regulator in the UK, basically stipulate, they're very customer centric, and there's a huge amount of effort that goes into making sure that vulnerable customers are treated well and aren't given credit that they can't afford to repay, and so on and so forth. And typically vulnerability is measured by financial resilience and a few other factors, maybe mental health and physical health and all those other things. And arguably in our current situation, we've all sort of become vulnerable to some extent, or that line's become much more blurred. And so it's a really difficult job to kind of lend now and make sure that you're not sort of breaking the rules. So we have seen a lot of the sort of overall volume of lending has reduced, and that's partly down to some things just not happening. So people aren't buying cars, they're not really buying houses, and so those types of products are obviously slowing, unless you're talking about remortgages. But also because of this reduced lending, the kind of need for more data in the decision-making process has really grown. So we've actually seen a massive growth in new business and new interest in our approach to the credit underwriting process, because it's very income and financial stability focused, rather than kind of being a little bit more sort of outdated and having a bit more of a lag, so we can see much more real-time insight. And I think it's a real opportunity for open banking now to kind of solve a lot of the problems that are being created by this crisis.
I mean, it's great. We're actually seeing, I mean, for such a long period of time, we've seen people kind of bashing open banking that it hasn't really produced anything. But actually, it's these things where the circumstances change ever so slightly, and actually open banking facilitates a whole bunch of things that we can do very differently, isn't it? And I think, I mean, very often people are kind of putting forward this argument that people just don't know what open banking is. But really, I mean, the benefit of your products, your business, you don't even really need to mention the fact that it's anything to do with open banking. It solves like a real problem for people, doesn't it?
Yeah, I mean, I've long sort of had this argument, and I think, early 2018, when open banking was sort of launched, quote unquote, I think it was much sort of more reasonable to say, that it hadn't really taken off yet. But there was this expectation that everyone was suddenly going to go crazy about open banking and walk around wearing T-shirts with open banking written on it. And I think, it's just like faster payments. It's not something that people talk about, in regular household conversation, but it's still, creating value for millions of people. And I think open banking is the tool. And what's really interesting is the propositions that you build on top of it. And, access to credit is a huge opportunity to kind of really use the data for good.
I agree. Loads and loads of people jumping in on this from all over the place. So Alberta representing North London. It's all getting a very gangster in here now. Gavin, BBC News presenter who was on the show a couple of weeks ago, saying good morning. Good morning, Gavin. Good to see you tuning in. Brian, good morning. We've got good morning from Pakistan. Southwest London as well, David, over there. So we're going to get some like London boroughs vibe getting on here, which is good. All right, question from Charles Lang. What impact will the Bank of England's direct financing extra government spending have on retail lending? It's a good question, right? Because actually, I guess with more money sort of coming into the market, it could impact. But what's your views on that, Freddie? Do you think it'll have a kind of a major impact in terms of where we are today?
Yeah, I mean, I think that, certainly from what we've seen on the ground, businesses that are sort of the coalface are still looking to lend, and they're I guess that whenever there's a potential financial shock, potential recession, the default position is to kind of stop and take stock. And I think that's what we're seeing right now. But I also expect very quickly that we'll start to see people reintroduce. And what's really interesting for us is they're reintroducing into a completely different customer base, customer profile than where they left. And so, a lot of what applied before is less relevant now, and especially because we've got people potentially on payment holidays, mortgage holidays, and now we're seeing the FCA mandate something similar for unsecured credit cards and things like that. So, distinguishing as I was talking about before, the stability or resilience of an individual customer is becoming more challenging. But I do think, there's, as you say rightly, there's still a huge need for credit and plenty of people that are creditworthy. I expect that to sort of iteratively grow, and I think that the stimulus is certainly helping that, and I think we're going to get onto it, but not just in consumer, but in the SME lending space, where again distinguishing risk in such a broad spectrum. What's the difference between a barber and a wedding photographer versus a small company versus a chip shop, and all of those different situations and how they've been affected. To be able to measure that's going to be really, really important, and be able to help those people.
Yeah. A question that sort of came in, Chad West over at Revolut. Good morning, Chad. Have you seen much interest from larger organizations in the products that you've got right now, or is it more sort of targeted at those smaller SMEs?
So in terms of the companies that use our process, it's a full spectrum. So right through from credit unions that we work with, and we maybe you can come on to the Affordable Credit Challenge, but all the way through to tier 1 banks. So we work with some of the largest banks in the UK. The use cases kind of vary. So, in the tier 1 lending space, banks are still very interested in how they serve customers that sort of haven't traditionally fit their credit profile. So, gig economy and people that are kind of flexible income being a great example of that. But also, providing mortgages and mortgage processes, a big part of that is credit affordability, which is traditionally a lot of paperwork, a lot of process. And, another point that we didn't mention before, but a lot of these companies rely on face-to-face meetings or call centers that are overseas that have also had to scale down. And so having digital channels and processes to capture that data is now, a must rather than a nice to have.
Yeah, I mean, that's a really interesting point. The amount of organizations now that are sort of facing into the things that they put off for a decade being now the default channel for everybody to do all of these things, aren't they? So, and with I guess the lockdown looking like it's going to be another, 2 to 3 months potentially, then they don't have a magic wand just to have all of these things. So working with organizations that do is a very quick way of kind of getting there, isn't it? Tell us more about everything that's happening with COVID credit then. We had Simon Van Cleaner on a couple of weeks talking about where we were, but things have moved forward, haven't they? And it's good to see people like yourself and people like Simon and Jamie and everybody getting together to build something. But tell us about the background to COVID credit and where it sort of came from.
Yeah, so it was really down to your colleague, Mr. Simon Taylor, that tweeted, I think 3 weeks ago on a Saturday morning that, like many people, he was sort of observing that there was a kind of a big elephant in the room in terms of at that point, the government had announced their remedies package for employed and also the CBILS, the business interruption loan scheme, but they'd sort of left out the self-employed freelancer community, which is sizable in the UK as it is elsewhere. And so he kind of just was sort of pondering on Twitter that, it'd be possible to build a solution using open banking data, using other sources to allow someone to get access to a remedy. And the rationale was that it's probably that it's difficult to measure those people at the moment. That was what sort of the reason the government hadn't stepped in at that point. And that tweet was very quickly followed up by, as you say, Simon Van Cleaner from Fronted, formerly of Monzo, who said we could build this and copied us in. And I kind of stupidly said, yeah, sure, we could do that. And then before I knew it, we were on a Zoom call planning out how we were going to build it. And, it just sort of spiraled from there. So we set up a Slack group. I think by the end of the first day, we had sort of 30, 35 people in there from all different startups. We, a bunch of engineers from my team and from the Fronted team sort of got together and started building a proof of concept. The basic idea was that an individual who sort of slipped between those two categories could self-certify by going through a step-by-step web application and then use open banking data, use our classification engines and income recognition engines to prove that they had a certain amount of income prior to this crisis and that they subsequently lost it, and then use that as a sort of source of evidence for applying for some kind of government remedy. At that point, the government hadn't announced anything, and obviously a couple of weeks later they did. In the interim, we had really positive conversations with all the key stakeholders, so the FCA, Treasury, and HMRC, most notably, and talked through how this could work. And they're incredibly receptive. The FCA was sort of offering us the opportunity to kind of sandbox test the process and talk through how we could quickly get regulated for all of the bits and pieces we needed. And HMRC, talking about their API ecosystem and the application processes that they were building to kind of distribute some of this money. So it really quickly kind of became a fully working project that we could demonstrate to government what was possible in a really short period of time. And from there, we obviously, as I say, the remedies have been announced now, and so we're looking at how we can kind of use this as proof of concept that can help in how they build the solution for that.
It's great to see, isn't it? I mean, you've got Simon Cleaner's really got to say, be careful what he says on Twitter, I think is the moral of this story, because you completely lost your weekend, and 30 plus people did as well, which is good. But
yeah, we weren't doing anything else, to be fair.
This is very true. Imagine what you could accomplish on this 4-day weekend approaching us, right? But it's amazing to see when a group of people get together to sort of solve a real problem. And again, it just shows, actually, I can't imagine, 3 big banks getting together to work in this way, in such a collaborative way, at such speed. so the fact that you guys fronted, everybody got together to sort of build this thing and put it out there, and actually not just that, but the reaction from the FCA and, like, say, HMRC to it, and their openness in this period to work with people to solve real problems is real. It shows why we've got, I think, the best ecosystem on the planet for this stuff, right?
Absolutely. Yeah, it was really good to see, and I think by the end of it, we had about 50 people in the Slack group all offering their help. So yeah, it's great.
Yeah, there was lawyers coming forward offering support, all sorts of people kind of putting in what they could really sort of contribute to make it happen. So I hope that grows and grows, and I think with, like I say, with the support with HMRC and the support from the FCA, then hopefully that'll get to be a bigger and bigger thing. But it just shows. I mean, do you think the fintech is playing more and more of a role with developing and sustaining the economy now? Because actually, with stuff like this, where it can be put together really quickly, it shows the big players in the banking system or the technology system really what they should be doing, doesn't it?
Yeah, well, I think, and I think you were tweeting about this a couple of weeks ago, but this whole crisis has really accelerated some of the change that we were kind of pushing for as fintechs anyway. That's stuff I was talking about before, digital channels. I was talking about this in a call the other day, and for a long time it's been okay, if for example, take the credit underwriting scenario, to add more people to the call center, make it bigger to cope with demand and scale up. But suddenly, if very quickly everyone switches from not being able to walk into a branch, not being able to use cash, not being everyone calling you on the phone, then suddenly having a digital process is you can't get away with not having one. And so it's really pushed a lot of the fintech products faster because of that. And as you say, that they're best positioned, we as fintech providers are best positioned to do this stuff quickly. So I think to that extent, it's really accelerated fintech for good. And it's kind of the change we've all been pushing for, but just accelerated. And the same with working from home. How many of these massive organizations just said, working from home, it's never going to work, we can't do it, it doesn't scale, blah, blah, blah. And suddenly, no choice, you've got to do it. Suddenly it's seeming to be a doable thing. So it has accelerated a lot of these changes. And I think the adoption of fintech, I was thinking about identity checks, for example, as another parallel to this. For a while, a lot of the banks were sort of, 15-20% digital with some of these, startups that you can think of it. And then 80%, offline or form-based or in branch or whatever. That 80% just disappeared. So guess where it's gone? That it's suddenly grown these fintech businesses to a real scale. So it's really interesting.
Well, major changes always have, it's whether all the changes that we see, how long lasting they'll be. Whether those organizations all sort of go back to their, I've been doing a lot of exercise during this period, but I know when I go back to London that the bad sandwiches and pizzas are going to be calling me again. So it's whether people can kind of sustain this good process that they're in. One question here from Nigel Walsh over on LinkedIn was, does this period show that cash is now really dead? Is it gone, or do you think it will be back? Because obviously we've seen such a massive reduction in cash usage over this period. I guess transactional volume across the board has gone down, hasn't it? But we've seen this in other places. India, when demonetization happened overnight, people removed making cash payments and digital became such a thing. But do you think because people now see that they can do all of these things digitally, that they will stick to them?
It's a really good question. I think cash has always been a sort of narrowing minority, but for those people that are using it, it's crucial. It's kind of life and death. And I remember hearing some statistics on the state of New York and how much cash is in circulation still there, and it's mind-blowing. It's like 10% or something, or something pretty astronomical. And I think you really risk, and I'm sure people have heard this before, you really risk sort of excluding the most vulnerable people if you take that away and don't sort of provide an alternative. Hopefully that we're on a transition where people are gradually getting more digitally capable, and that it's a cross section. It's not just financial understanding, it's digital capability as well, and those things need to kind of align before you can kind of truly remove it. And I think it's difficult because you still do have debt advice charities and sort of helplines encouraging people to transact in cash because it's physical, it's tacit. People can put it in jars and they can really see what they're spending. And for a lot of people, having a contactless payment, it doesn't feel like real money, and it can lead to kind of downward spirals of spending too much. So I think we all know that that's the direction of travel. I don't know that this will completely kill off cash, and until we really have a true universal alternative that doesn't kind of exclude anyone. But hopefully, it's I don't have to say why it's a good thing that we don't use cash, but hopefully we're on that path.
Yeah, it does feel like it's it gives it a go, doesn't it? And now everybody can gain access to banking, whether it's SMEs or personal. Then we'll have to see whether it sticks or not. But a couple of questions that came through on LinkedIn of various different guises here. So I'm going to jump around a little bit, Freddie. So stick with me here. Catherine O'Brien, I think her name is, over at Harrington Star said, you spoke about hiring and virtual onboarding. Are you worried about hiring in this period if business slows down? I mean, you're VC backed, aren't you, Freddie? So I guess you've got runway to sort of get to a position in the market. But I guess with everything that's going on at the moment, I mean, it's both a great time to try and hire people, but also a really scary time to try and hire people, isn't it? Because if you've got money in the bank, then with lots of different organizations slowing down, then actually the access to talent is greater than ever, isn't it? But at the same time, given we don't even see a light at the end of the tunnel yet, it's quite a scary thing to be bringing people in, isn't it?
Yeah, I mean, for sure. I mean, we're certainly not going crazy and like hiring hundreds of people or anything like that, but the specific roles that we wanted to hire this year, we still need those people, and we can do a lot of our work irrespective of what's going on. Obviously there's a kind of sales and commercial portion of the business that is affected differently by this. Like anything technology and product, we can continue to move on. It's completely in our control. And what's quite interesting actually is one of the challenges, and I'm sure you'll echo this, David, is working with big financial institutions. They're very often chewed up by BAU stuff that building anything new is difficult. And if you've got lenders that are somewhat retreating from the market and somewhat thinking about how they re-enter, they've actually got a bit of time on their hands to think, well, how do we tool up to kind of be ready for what's coming in the pipe, and so that actually that's accelerated our workflow, and so needing people to kind of work with those companies and get those things up and running has meant that we need those people. But yeah, I mean, it's a scary time because no one likes uncertainty, right? And no one knows what's going to happen. So yeah, we're not going crazy about hiring people, and it's very important to us that we can give everyone that works for us confidence and stability, and I'm pleased to say we can do that.
Yeah, I mean, exactly. I completely echo what you said there. I think it's during this period, it doesn't mean that things that you thought were going to happen are not happening. There's products to develop, there's things that were in train. I think for us, there's a little bit of a change in emphasis in some of the stuff that we were doing. But really, the things, your plans are still your plans. It's just the circumstances change. I like the idea of tooling up for the crisis. That sounds very North London. I'm just going to say, Freddie, like. I think our international audience will have to go and Google up what tooling up for the crisis means. But that's good. Loads and loads of questions that we are not going to be able to get to, unfortunately, because we're coming around about to the top of the hour. But what I'd say, Freddie, is go jump on these comments. There's some really great asks about credit and various different impacts that this will have. So go and answer as many of those as you can, and get back to these guys. Thank you so much for joining us this morning, Freddie. Where can people find out more about what you're doing with COVID Credit, but also Credit Kudos as well?
So we're creditkudos.com. There's a piece on our blog about COVID Credit. I'm Freddy Kelly on LinkedIn, and pretty much everything else as well. So say hello.
Sounds good. All right, guys. Well, as we are just over the top of the hour right now, we probably better get on and let everybody get on with their day. So if you didn't know, it's an Easter weekend this weekend in the UK. So there'll be no show tomorrow and no show on Monday. But we'll be back on Tuesday where I'll be joined by Anne Bowden, who is the founder and CEO of Starling. So that should be quite a lot of fun, I imagine. So tune in on Monday, 8:30 UK time. Until then, have a great weekend, have a great long holiday. Please stay inside, like do it for everybody else as well. Stay safe, guys. Enjoy your Easter break. See you on Tuesday. Bye.